Hey guys, how is everyone? How is everyone? Chat. Um, uh, how is everyone? Okay, I see the questions come through. All right, nice. Well, we have a record attendance today, right? Record attendance today. Just give me a second while I pull up the. I'm presenting from the webinar room today, so slightly different, right? A slightly different background too, right? Yeah, slightly different background. Hey, Mark. Yeah, Mark as usual, first one here. Nice to see you guys. Hey, Derek. Oh, from Spain. Nice to see you. We got Diane. We got Bob. Right. Diana, Samuel. Right. Nice to see you. A whole bunch of you guys here. Syed, Robin, Alan, Anthony, Julio. Yeah, super dry, man. Super dry. Unofficial sponsor, super dry. Right. Kanemba, nice to see you. Right. Rajski, nice to see you. Joel, Syed, Yan Chong, yeah, long time no see, man. Right. Okay, Mario. Imad, nice to see you. Okay, wow. Carlo, you passed your 100K challenge for FTMO. That's congratulations. Maybe you can share with us a little bit more on how you did it. That is great. I'm so happy to hear that more and more if you all are passing your challenges, right? Taking the financial futures of you guys into your own hands, right? Doing really well, right? So yeah. Hey, Data Prasad, yep, I'm back. Adriana, nice to see you. Edison, nice to see you, right? Omar, I'm doing well today, right? I guess you can't see my IBEX, right? But I'm doing quite okay, right? I'm doing quite okay. Yeah, I'm doing quite okay today, right? I think. Let me see. Yeah, it looks like this is the. I just need to tweak this a bit. Yeah, yeah, presenting from the webinar room today, right? It's slightly different. Not my usual, not my usual setup, but yeah, you guys can see me, and that's enough. All right, yeah. Oh, okay, Grant from Brisbane, Australia, nice. Okay, guys. Thanks for tuning in. Thanks for tuning in. Today's session is a very in demand session. All right, it's one of the most in demand sessions that people have been asking, which is the scalping strategy that I've been teaching you guys for a while. You see a lot in my live trading analysis, but today we're going to take the chance to once and for all answer all your questions behind how to scalp properly. Right. In the sessions in June, we'll be going to day trading, swing trading, each with a very different approach, right? I'm gonna show you how I really dive really deep into the charts, how I kind of map it out, but the scalping strategies. Most of our live market analysis, we are kind of doing slightly longer term setups, right? But a lot of you guys have been saying that you're interested to see some of the more intense scalping strategies, right? And how especially the trade management and goes behind it, right? The break even, idea and validation, partial profits, the stuff that is really intense, right? And that's why I'm going to point you guys to a couple of webinars, right? Which a couple of webinars where you might need to refresh your memory on some of the terminologies that we're using, right? Is anyone here for the first time? Right? Can you let me know? We have a record attendance today, so I believe there should be quite a number of you guys here who are here for the first time. Hey, Desiree, nice to see you tune in. I hope you're recovering well from COVID, right? I hope you're recovering well from COVID, right? All right, we got Grant here for the first time. Joanna, definitely not your first time. I remember you, right? Edison here for the first time. Welcome, nice to see you. We got Suhas, right? Tom, Janko here for the first time. Derek also, yeah, a lot of new names, we got Babatunde, Adriano, Marek, Luke, Alwin, Martin, Vinicius. Oh, Vinny, right? Like Vinicius Junior, is it from Real Madrid? Yeah, nice to see you. Oh, I see. All right. Last week was the first time, Anthony. Simon, good morning. Definitely not your first time. At least your 100th time here, right? Oh, okay. Parky, okay, been on YouTube for a while. That's nice, man. That's nice, right? Marcos, nice to see you. Ivans from Uganda. Kumalo from South Africa. Yes, Adriano, I can see you. I can see your message, right? Julio, I will check my Telegram. I know, I'm so sorry. I trust you. I'm like 101 things flying around now that I'm a new dad, right? Things are a little bit crazy, but yeah, tribe is growing quite a bit, right? It's a little bit dark in here. I wonder, can I make this place slightly brighter? I don't think I can, right? Maybe I can move my, let me see if I can. Hold on a second. Nah, completely doesn't help. Right? I just thought some natural light would help, but it looks like it doesn't help at all. Okay, cool. Right. All right, guys, if you're here for the first time, welcome, welcome. You picked one of the most interesting webinars to come for the first time. It's one of the most advanced webinars when it comes to scalping. So we're going to refer to a lot of advanced terminologies. I will do my best to point you in the right direction on some of the things that we do, right? But yeah, without further ado, let's begin today's session. Let's begin today's session. All right, guys. Now, let me just show you. First and foremost, of course, the disclaimer. Remember that everything in this webinar is purely educational, so nothing should be construed as investment or trading advice, right? So please do your own due diligence before you guys trade. Let me see if I can pull this thing so it's slightly brighter. All right. Okay. Oh yeah, it's actually brighter. Hey, Cass. Hey. All right. Yeah, that's Cassandra. She'll be running the live market analysis webinar tomorrow, right? But yes, let me introduce you guys to the show. What we're doing here. Okay. So at IC Markets, we do every Tuesdays we have our educational sessions, right? Every Wednesdays we have our live market analysis. Okay. So Tuesdays is where we learn. Wednesdays is where we practice. All right. Without fail, we'll be doing it for over the past 1.5 years, right? And I'm going to show you guys where to find it on YouTube, some of the past recordings that we have. All right. So anyway, our agenda for today, we're going to talk about quickly what is scalping. I'm going to show you 3 different strategies. Not say 3 different strategies, but 3 variations of a strategy. We got a 1 checkbox, we got a 2 checkbox, and we got a 3 checkbox strategy. Now, the important thing about trading is that it is not binary. Okay, it's not binary. It does not mean that it's not always 1 or 0, meaning that you don't just go into trade or don't go into trade, right? Sometimes the stars are lining up really nicely, like a 1, 2, 3 check boxes all line up very nicely, right? You get in slightly more on the trade, right? Then instead of risking maybe 0.5%, you might risk 1.5%, right? If you only have 1 checkbox that lines up, you put in maybe 0.5%, right? So depending on how nice the setup is, you can go for a low risk to medium risk to a high risk, allocating different amounts of risk to the trade, right? So that's the first thing I want to establish here in this scalping strategy, is that it's not just a single setup that you see. You will see multiple setups. Sometimes some are nicer than the others, right? And depending on how nice they are, right, you allocate a different amount of capital to that trade. Okay, and lastly, we'll talk about trade management, right? The thing with scalping, because it's the concept of scalping, right, is that you get in and get out very fast, right? And as important as it is to get in and make money, it's also on getting out and preventing yourself from losing money. For every trade which you avoid making a loss on, it is actually a profit that you made on the trade, if you think about it, right? Because if you lose 1 trade, just assuming a risk to reward of 1:1. If you lose 1 trade, your next winning trade goes to cover that loss. So you can avoid your losses, right? It's not only about profit maximization, it's about loss avoidance. You want to avoid your losses. And to do that, we have this thing called idea and validation, which I'll be talking to you about. A lot of people focus on just hitting the profits, but what's equally important is to avoid making loss. Okay, we'll be explaining a little bit about that later. Now, for those of you guys, what's the is asking for a link to it? Julio, what's the link to the webinar? I don't know, right? I think if the webinar started, I'm not sure if I can still get the link to you guys, right? Let me see if I can get the link to. I might have it here actually. Yeah, the moment the webinar starts is a little bit hard. Copy registration link. I'm going to send it in the chat section. So yeah, Julio, you can. I just sent in the chat, so you can actually use that, right? If you want to send it to him to join the webinar session. All right. So for those of you guys who are here for the first time, I'm just going to introduce myself really quickly to you guys, right? So you guys know me as a super dry guy. I've been wearing I've been wearing a super dry shirt for the past like 150 webinars, right? So you can tell I'm a very simple guy, right? I'm a very simple guy. But anyway, right, my name is Desmond Leong. I'm an external analyst over here at IC Markets. Okay, a few things that I want to let you guys know. Let me pull up my handy dandy little marker over here so I can do a little bit of drawings, right? Yes, this is me when there is, when I'm nice and vibrant. Now I'm a little bit, a little bit more eye bags here and there is because I just had a kid 4.5 weeks ago. 4.5 weeks ago. Yeah, about 4.5 weeks ago. So you're starting to see the eye bags kick in a bit, right? So yeah, I know, but I'm still surviving. I'm still surviving, right? I run the award-winning research firm, Everest Fortune Group, and also the Forex Army, where I just create a bunch of indicators and stuff. We're finalists for 2019, 2020, and 2021 for best FX research and also for best equity research, right? So we regularly, yes, yes, all right. Yeah, we regularly advise the institutions on where the markets are heading. So we usually advise the banks, brokers, and hedge funds, but we have a special partnership with IC Markets where we're bringing you guys the good stuff, the juicy stuff, the stuff that take your trading to the next level. All right. And of course, if you want to follow me on Instagram, you can find me at Comfy Desmond, right? Nothing much there, just really simple. Me, my dog, I don't have a dog, shit. Me, my cat, my kid, and my wife, and maybe some FIFA. Nothing much there. All right, and if you want to see some of the tools that I created, head over to the Forex Army. Okay, now if there's one word of encouragement that I want to share with you guys is that you don't need 30 years. I'm a young guy. I'm 32 years old. All right, you don't need 30 years learning trading in Bloomberg to be a good trader. You just need 30 days learning the right stuff. Right, the stuff that we teach here is different from the stuff that you find on Baby Pips. It's different from the stuff that you find on Forex Factory. It's really advanced. Right, and if there's anything I can encourage you guys is that we have so many testimonials pouring in of people whose hit rate went from 40 to 60%, 60 to 80%, unprofitable to profitable, right? It's great to see many people even taking their funded trader tests, right? I think there's some external tests that you guys take, FTMO and stuff, right? You can see, I think I forgot the name of the person slightly earlier who mentioned it, right? But yeah, I think, or is it Carlo? Yeah, Carlo has recently passed, right? FTMO challenge, right? That's great, right? And if there's one thing I encourage you guys is that yes, you can be a profitable trader. You just need to learn the right stuff because in trading, it's slightly different from the world of academia, right? A lot of people think that a lot of people confuse trading with academia, right? In the world of academia, the harder you study, the better you do. Right, the harder you study, the better you do, right? Because it's very simple, right? Because if you study, it comes out in the test, you do better, right? That's all there is to it. Okay, so it's very that's a problem when it comes to trading. If you take that same mindset when it comes to trading, right? You think that the more you study, the more indicators you learn, the more Elliott wave you study, right? The better you're going to do, right? That's where things go really, really wrong, right? Because trading is very different from studying. Right, trading is very different from studying. Right, you can learn a lot of stuff, but if you apply them wrongly, it becomes, you will affect your profitability. You might not be a profitable trader. Right, you need to learn not only the right stuff, but to apply it correctly. For example, you can learn Elliott wave, but that doesn't mean you can apply Elliott wave to everything. Right, you learn Elliott wave, you apply it to maybe positional trading, which is slightly better. You don't try to apply it to something like scalping. It might be a little bit too messy. All right, so that's the thing with trading academia, right? You need, in trading you can learn the right things and you can learn the wrong things. That's a scary thing. In academia, there's no way you can learn the wrong things, right? There's a book, there's a textbook you read. The more you read, the better you do, right? But in trading, there is no one single textbook which you can read from, right? You can learn the right stuff and you can read some nonsense that's written by some funny guy, right? And you can end up learning the wrong stuff, right? So what I want to encourage you guys to do is exercise discretion when you study, exercise discretion when you learn trading. Okay, now all right, let me just see some of the messages come through. Says, thank you for your congratulations, right? I hope you managed to get enough sleep. Well, I'm not getting enough sleep, right? Right, so yeah, it's gonna take a while, right? Yeah, I would say both are okay, Ashoka, right? It's not Forex Peace Army. We're not Forex Peace Army, right? I think Forex Peace Army is more of a review website. Okay. Carlo risking 1% per trade. That's great. That's great, Alwin. No, that's good, Carlo, right? And thank you, Alwin. Now, I'm gonna point you to a couple of places. All right, I'm gonna point you to a couple of places. that you're definitely going to need this terminology. YouTube, IC markets. Okay, of course, this is the first link that I'm going to send to you guys, right? It is the IC markets YouTube page. You'll notice over here we have a live analysis session tomorrow. Please, same time, same place, just that it's a YouTube live event. Go set a bookmark for it, set a reminder for it, right? Cassandra, who you saw just came in and came out just now, right? She's one of my prop traders over here. Should be running through some of the key setups of the week, right? It's usually a week where we have our find a lot of nice juicy setups, trades, right? So tune in tomorrow for it. The other place that I want to send you guys to, right, is a playlist. Which playlist is it? It's the IC Markets webinar playlist. All right, this is the playlist that you want to look at if you're first time here, right? You want to go through a lot of it, but for the sake of some of the, I'm just going to highlight a few of the things that you should be looking at. Okay, first and foremost, you should be looking at this, the Fibonacci series. I'll be referring a lot to Fibonacci today. You need to learn retracements, extensions, expansions, and projections. Okay, I'm going to use it a lot today, right? Then the next thing I'm going to look at is trade management, idea and validation, right? And partial profit and break-even placement. These are also equally important because we use a lot of this when it comes to protecting the trades, because in the lower the time frame you go, the more you need to exercise proper trade management, meaning that when you are scalping, right, things can get really crazy really fast, right? It's like the wild west, you know, things can go very fast, right? And that's where we need to apply proper trade management, right? And I'll be showing you how to do that in a bit. Okay, but if you see me referring to idea and validation, partial profit, break even, please check out these webinars to get a better idea of it. All right, now without further ado, let me just let me continue. Let me go back to this slides over here. All right, so let's touch on really, oh yes, and the last thing that I want to share with you guys, right? This is the link that you want to go to, ic.genesis.com, right? This is basically the VIP room that we have for IC Markets client. As long as you have an IC Markets account, you will be able to access this VIP room, right? So depending on the account size, whether it's 1,000, 10,000, or 100,000, you get different access levels, right? This is a place where there's a whole bunch of us over there, right? There's a whole bunch of us, you know, chatting, right, and sharing trading ideas with each other. But it is also a place where you can get direct access to me, direct access to Cassandra, to Joanne, to Melanie, the whole bunch of us, right? So you can run your trading ideas by us. This is very important when you want to practice your technical analysis. Let me show you what I mean, right? So for example, you could be looking at, let's just say we're looking at euro dollar, okay? So on euro dollar, right? So same thing here. You might be wondering if this is a trend line, okay? If this is a trend line, no, if this is a channel, right? You can then come in here, right? And you can say, right? Hey, maybe you can add mention Cassandra. For example, hey Cassandra, is this a valid channel? You can then highlight this text. You can click this button called link object to text. Right, clicking on it allows you to select any object on the chart. So in this case, we're going to click this channel over here. I'm going to click confirm, and I send the message through. So when someone sees it for the first time, right? When someone sees it for the first time and they hover the mouse over it, right? Is this a valid channel? When you hover your mouse over it, you can see that it lights up, right? So this allows us to understand exactly what you're drawing. Is that a channel you're drawing? Is that a trend line you're drawing? Is that a Fibonacci? Is that a support and resistance? We know exactly what you're drawing, and then we can go into a little dedicated discussion area over here and talk whether it's a correct trend line. And I say, you know, yeah, it lines up nicely with this resistance. What resistance am I referring to? Link it, draw the resistance, and done. Send a message through, right? So people can say, oh, this is the resistance level. You can see it light up over here when I'm drawing it. Okay, so yeah, so this is actually meant to help us to help you practice, right? So all you need is an IC Markets account, right? And as long as you have IC Markets live account, you get access to this VIP room. It's a great place to really practice your trading, right? It's a great place where I can guide you. Remember, if you learn the right stuff, but you practice it wrongly, it's as good as learning the wrong stuff. You need to learn the right stuff and practice the right stuff, right? I mean, we do have some fancy, nice little gamification. You know, we got little ranks and badges that you can achieve along the way, right? The more you participate, and we kind of give prizes out to people as they rise up the ranks to reward them, right? But yeah, it's a nice little place that you can go to, right? You can also view the leaderboard, right? You can view the leaderboard. Who are the top participants over here? Who are the people with the sniper badges, right? It's a nice little place where you can find a lot of like-minded IC market traders. Okay, now let's continue. Let's continue. What is scalping? Okay, what is scalping? Edison, you can get access to it in. I'm just going to copy this. I'm just going to send it to you. Send all. This is this is the link that you want to go to, right? And you get access to it. Just rather when you load it, right, you just need to register for a free account and you can get access to it. Now, what is scalping? Let's touch on really quickly what is scalping, right? Can you guys share with me how long do you think you usually hold a trade when you're scalping? How long do you usually hold a trade when you're scalping? And how many pips do you usually go for? Give me 10 seconds. I'll just go get a quick drink because I realize I can't find my water over here. Just give me a quick second. I can see a lot of answers come through. A couple of people say minutes. So that's the thing, 1 to 5 minutes, 1 to 5 minutes, 1 to 2 minutes or 5 minutes. A lot of people are actually answering minutes, right? Just a couple of minutes again. Some people say 2 times ATR. Up to 1 hour, maybe 15, 30, 20 pips, 10 pips, right? 5 to 7 pips by Jarnail. Is it intraday? Correct, intraday for 5 minutes, 4 hours, right? Few minutes, 1 hour max by Alwyn, right? 30 pips, 5 minutes. All right, okay. Well, there are a lot of answers. A lot of the answers revolve around a couple of minutes, right? A couple of minutes to at most a couple of hours. No one says beyond 1 day, which is correct, right? Because any trade beyond a day is like a day, it's a swing trade, right? Any trade that's too big of a day is actually called a day trade, right? You're actually looking for, what is correct is that you're looking for small moves, all right? So there is no fixed number of pips, 20 pips, 30 pips, 1 to 5 pips, because it actually depends on the currency pair, right? Euro dollar, 1 to 5 pips makes sense on euro dollar, but 5 pips does not make sense on pound Aussie, because pound Aussie the spread might be 2 pips already. So it's very hard to go for these kind of setups if you're scalping. But what is true is that scalping, you're going for very, very small number of pips, a very, very small movement. You're not going for a big movement, right? You think about it. Sometimes when people want to scalp, right, they think like what they think about the news, like what's going to happen on the what's going to happen to oil, what's the outlook on oil, what's the outlook on gold, right? And the truth is that when it comes to scalping, that doesn't really matter. Okay, your long-term fundamentals does not matter that much in scalping. What matters a lot more is that when you're scalping, you need to focus a lot, almost entirely on technical analysis. What I'm going to teach you today focuses 100% on technical analysis. So if you love technical analysis, this would be a great a great approach to scalping. Okay, yes, a lot of the answers are correct that it's a short time frame and it's a small number of pips. That is what you're going for. So why scalping? Why I like scalping? A lot of you guys have been following me for a while. You know, I primarily am a scalper. I'm pretty good with day trading. I'm pretty good with swing trading, but my go-to strategy is scalping. Why I like scalping is because of this thing called locus of control. Okay, why I like scalping, I'm going to repeat this again, is because of this thing called locus of control. Now, let me give you an example. Right? How many, when we look at a weather forecast, right? If a weather forecast tells us that it's going to rain in the next 1 hour, and another weather forecast tells us it's going to rain in the next 1 week from now, right? So one of it says in 1 hour, one of it says in 1 week. Which one is more reliable, right? Which one is more reliable? Is the one in 1 hour, or is it the one in 1 week? All right, I see a lot of you guys answering 1 hour, right? Alwyn is saying 1 week. I have no idea why he's saying 1 week, but it is 1 hour, right? That is their locus of control. They can see the clouds nearby. They know what's going to happen in 1 hour, right? And that's why it's more reliable. Something that is further away, like 1 week, that is where it starts to lose its reliability. Yeah, I know most of the time they're wrong, right? But let's just say, there's a higher chance that they might be right in the next 1 hour. Yeah, in the UK always rains, so maybe it's slightly easier. But yeah, so guys, when that is what I mean by locus of control. I know what is going to happen in the next 1 hour. When I get into a trade, I know roughly what's going to happen in the next 30 minutes. I don't know what's going to happen in the next 1 week, 1 month, right? And so much can happen, right? The stuff with the COVID restrictions in China, right? The Russia-Ukraine war, a lot of stuff that can happen that can flip the markets on its head, right? And some of the markets can go crazy. You might be correct for maybe 3 days or 4 days, but the remaining 2 days, some big news event happens and things go crazy, right? So when it comes to locus, when it comes to trading, what you want to do is to be in control, right? And to be in control, you need to your trading strategy needs to have a strong locus of control. Strong locus of control happens when there is little time between your entry and your exit. That is why scalping is so good, right? Because you get I know that when I get into trade, I know that there is no big news event that's going to come in the next 1 hour. I got economic calendar for that. All right, okay, it's pretty good, right? I expect my trade to to go unhindered in the next 1 hour. The only crazy thing is that maybe Donald Trump comes back to Twitter, he says something crazy and might move the market, but rarely is that the case, right? Because I know maybe at this time it's sleeping now, right? But you have a much better control of your locus of control, right? Yeah, short-term reliability, long-term unpredictability. That's right, Nick. Okay. So Alwyn is asking, is it a bad idea to scalp during high impact news? Now, so high impact news events is what I call a known unknown. You know it's coming, but it's an unknown outcome. Okay, I'm going to repeat that again. You know it's coming, but it's an unknown outcome. Okay, so that's the danger of it, right? Because there's going to be volatility, like the non-farm payroll, right? The first, the U.S. unemployment job report, on the first Friday of the month, right, which is this Friday. We know it's coming. We know the exact time the news will be released, but it's an unknown outcome, right? We don't know whether it's going up or down, right? So it's usually bad to scalp during that time because there's a lot of volatility, right? And this kind of volatility does not work well for scalpers. We might be right, but it might be whipped out. We usually need to avoid these super high impact news events. You don't need to avoid all of them, but only those that are really, really shake up the market. That's right, guys. Now let's okay. So that is what scalping is, right? You get in and out of the trade fast. When scalping, IC Markets has two accounts, right? They have I think they call it ECN account or VIP account. IC Markets has two accounts, right? They have the account overview, right? They have the raw spread and they have the standard account, right? When it comes to scalping, right, usually the raw spread account will be the better account because you need to, spreads matter. Okay, if you're swing trading and day trading, standard accounts are better. Okay, because that 0.6 pips is not going to matter to you that much, right? If you're targeting 100 pips of profit. However, right, if your spread is 1 pip and your take profit is 5 pips, right, that's already 20% of your trade. 1 out of 5 is already 20% of your trade is going against you if you don't have a low spread account, right? So IC Markets is great spreads on their raw spread account. If you're scalping, this is the account you're going to use. The standard account might not work that well because of the wider spreads, purely because of the wider spreads, right? If you scalp, like I said, if you're scalping and your spread is 2 pips, your take profit is 5 pips, just getting into the trade, you're already 2 out of 5 is like 40% of the trades already against you. So you want a raw spread account if you're scalping, just to put things into perspective. Okay. Now, now to move on from here. Okay, so I shared with you what scalping. You know, it's small number of pips, really in and out of the market quick. Not necessarily 1 to 5 minutes. My scalps can usually last up to 3 or 4 hours. Okay, and that is because I scalp on the 30-minute and the 1 hour time frames, right? So when you're scalping, there are many time frames for you to look at, right? There's a 1 minute time frame, there's a 5 minute time frame, there's a H1 time frame, there's a M30 time frame, right? But the furthest I would go is to the H1 time frame, right? I won't go to the H4 time frame because it gets a little bit messy. That's the first thing you need to know, the time frames that I'm looking at. I won't look at 1 minute. I sometimes don't even look at the 5 minutes. I look at M15, M30, and H1. Okay, M15, M30, and H1. Okay, so that's scalping. Now, I'm going to talk about a checkbox system for you to look at, right? When it comes to a checkbox system, right, it shows you I have 1, 2, and 3. Okay, 1, 2, 3 checkboxes for you to look at. Okay, depending on the number of checkboxes that are checked, you risk a different amount on each trade. The bare minimum requirement is when one checkbox is done, right? And you risk 0.5% of your account on each setup, right? This is personally how much I risk, right? If I have 2 checkboxes, right, I'll risk 0.5 plus another 0.5%. I got 3 checkboxes, I'll risk 0.5 plus 0.5 plus 0.5, so I end up 1.5%, right? The max I will go is 1, 1, 1, right? But what the approach I do is that I have a checkbox system. The more checkboxes, the more confident, the more I will risk on a trade. Okay, that's the important thing that you need to wrap your head around. That trading is not just yes and no. It is yes, but how much? Okay. Now, the first one I talk about just happened when you do this Nike tick, right? Is this thing called the 127 and the 138. 127% and 138% Fibonacci extension. Okay, that means you take you took a starting point here. Why I call it a Nike tick is that you take a starting point over here, your ending point, price to go down, and you're looking for price to go. You're looking at price to go up. This is 23, 38, 50, 61, 78, 100%. Go up slightly more to the 127, right? And 138 is your stop loss. Okay. Now let us just look at some charts together. I did not prepare all the charts to look at, but there are definitely some charts for us to look at. Okay, I'm just gonna close this off over here. Now, for example, so I believe one of the nice ones to look at is gold, right? Let me just, for the sake of this, load XAU USD instead. Okay, load the 1 hour chart. Now, let me show you some examples. Let me just show you some examples. You need to pick this thing called a Fibonacci retracement. We're using trading view over here. We're using trading view, okay? We pick this Fibonacci retracement, right? When you draw a Fibonacci retracement, you'll notice that I'm going to use all Fibs over here. You will notice that there is, let me explain to you. You have a starting point, you have an ending point. Price will rise up 23%, goes up 38, 50, 61, 78, 100. 100% means that it has retraced the entire move already. 127% means that it retraced the entire move and it went slightly higher. So notice this looks like a nice little Nike tick over here. Okay, it looks like a nice little Nike tick. And that is the move that we're playing. We're playing this move over here when price reached the 127% retracement. Okay, when it reached the 127% retracement. We are going to use what I call the 127 and 138. Okay, 127 and 138. Now let's see in action, right? I'm just going to look at some levels over here, right? I mean, we have probably this. Sorry, this is the starting point. There you go. You can see in this move over here, right? I'm just showing you in real time. Okay, this is a Nike tick. What you're looking for is very clear Nike tick, right? You can see that price bounce off the 127, right? If our stop loss is usually below the 138, okay, and we look to play to this move over here, Okay, so if there's a Nike tick over here, right? There's a Nike tick over here. My God, my drawing is terrible, right? If we have a Nike tick over here, we usually play back to where the Nike tick started, right? So we kind of play down to this movement over here. Okay, we put entry here and we put our stop loss slightly beyond the 138%. Okay, I'm just going to show you some examples as I draw it over here. Okay, I'm just going to show you just this by itself, right? Is enough, right? For example, over here, you can see price did bounce off the 127, right? And it went back to our take profit. Our take profit was over here, right? So it entered over here, right? Entered over here, and it reached our take profit. Okay, now there's a reason why I did not take this as the starting point, because of this movement here. Remember, we're looking for a Nike tick or reverse Nike tick. This movement here means that my Nike tick is not very nice, right? This is a clear movement. This movement from here to here is clear. This movement is not nice. So that's why I will not draw a Nike tick from here up to here and down to here. You're looking for clarity of movement. Okay, clarity of movement. Next thing I'm going to show you maybe a Nike tick over here. Another example, right? You can see price comes down, nice little Nike tick coming up to here. Price react off it a couple of times and it dropped down, right? You notice that 138% is our stop loss. You're always slightly beyond. Kunal, yeah, I think this recording will be uploaded on YouTube. Simon is correct. What we usually do is we usually play to the 23% retracement, right? Let me show you what I mean. My starting point is over here. My ending point is over here. 23%. I'm just going to delete this 38. Save as 23. Okay, so we usually play to a 23% retracement. Okay, so if my starting point is here and my ending point is over here, right? I usually play down to the 23% retracement. That is enough, right? I try not to play beyond the 23%. Yeah, you can look at divergence. So I'll add in divergence later, right? But just to show you some of the examples that we have over here on how the Nike tick really works out, right? You can find it. You'll notice that it happens in a lot of different examples. Sometimes it just misses it by a bit, like over here, maybe. I'm not sure. I'm going to do 127, 138. It's slightly far. Let's see some other examples, right? Maybe this example, 127, 138. Now this one, it kind of let's see, it will have kind of stopped you out for this, right? So I'll show you how to improve the odds of your setups later, right? Sometimes it might look like you did not make a profitable trade, but actually it is. You would have made a profit based on your trade management. You would have made a profitable trade. For example, look at it over here. The clearer the movement, the better the setup, right? So from here, come down to here, you notice that it just has enough to bounce up. This would have been enough for you to make the trade already, right? Rod is asking me to slow down a bit. I will try my best to slow down, but I'll try to give as much examples as possible too. Okay, guys, right? So would 100% and 20% be? No, the 100% and 20% are not exactly the same place. 23% is just slightly higher, slightly before the 100%. Now, Aurora is asking why, when I draw a Fibonacci, why do I use the wicks? Okay, and let me explain to you here, right? So let's use an example, right? Let's use an example. Okay, we're going to use this example over here. My starting point is over here. Okay, so let's assume we don't use the wicks, right? Rod, my pending entry is at the 127, so I straight away get in on the 127, right? So imagine if I don't use the wicks. This is my entry. This is my Fibonacci retracement. Okay, this is my Fibonacci retracement. Let me just pick one single level, 23%. Okay, I'm just going to do a bar replay feature and show you this 23%. Okay, this is 23% when I'm not using the wicks. When I change the time frame to 15 minutes, can you see that my I need to move this slightly higher. If I change it to 4 hours, can you see that now my starting point, if I don't take the wicks, I need to move it to here and I need to move it to here. Notice that my 23% keeps changing, right? If I 30-minute chart, suddenly I need to move this down again. I need to move this up again. You notice that if you don't use the wicks, no matter the time frame that you change, 15-minute, 30-minute, 1 hour, 4 hour, it keeps changing. Your Fibonacci keeps changing. However, if we use the wicks, right? For example, I use the wick down here. I use the wick up here, right? This is the 30-minute chart, right? You can see 1 hour chart, exactly the same. 4 hour chart, exactly the same. 15-minute chart, exactly the same. Even the 1 minute chart, is the high and the low is exactly the correct levels. All right, so that is the important thing when it comes to let me just zoom a bit. That's the important thing when it comes to drawing Fibonacci. You need to take the exact levels. Okay, so Fahad is asking what time frame I should use. I usually use it on the 30-minute and the 1 hour time frame. I don't go beyond the 1 hour and I don't tend to go below the 30 minutes. Okay, so the 1 hour time frame, it works very well. Now let me just show you a couple more examples of like different situations of this setup, right? So maybe I think this would have been an unprofitable trade. Let me see. I need to find examples where it's not only unprofitable, but now this is profitable, right? So you can see, oh, this is a perfect example. This is a perfect example on the setup, right? All Fibs. Nope, sorry, this is 127138. All right. So you notice over here, price often when it reaches the 127, it bounces up to the 23% over here, right? It's almost where the 100% entry is, and then it tends to go further. That's why we don't try to play it too far. This by itself, right? This level is what we call in support and resistance, we call it pullback resistance. Most people consider this like the level where it broke out from, right? So when price breaks out of this level over here, right, it tends to retrace a bit and then it continues on its journey, right? Most of the time, that's what it happens. That is why it is slightly hard for us to play a move maybe all the way up to here because of this big resistance over here. And that is the main reason why I don't play the move beyond there. Let me find an example where idea invalidation works. Let me find an example where idea invalidation works. This one will have more or less hit the target too. Could be this. It could be this. This one still makes money, right? Okay, never mind. This is an example of the really simple setup. Now you will see a lot of this. Honestly, you'll see a lot of this when you're trading, right? And how it usually works, right? I'm just going to draw it out for you. Is that once you draw a move, right? We draw a move over here, your starting point, your ending point, and it comes, all the way to the 127, right? This would be your entry, right? So this is like, for example, your sell entry, right? This, your stop loss, right? Remember your stop loss, what you want to do is that you want to put your stop loss slightly beyond. Give it that little bit of breathing space, right? Don't put it exactly at 138. You're gonna get stopped out. You put your stop loss slightly beyond over here, maybe. Okay, and your take profit, right? If you're gonna put a take profit, now how are we gonna do our take profit? Now the take profit moves with price. Let me re-emphasize it there again. The take profit moves with price, right? So if your entry is over here and it comes all the way up to here, right? If this is your entry, I'm gonna put 23% retracement over here. Your take profit by right is more or less about over here. This is your take profit. I tend to like to put my take profit just slightly higher where the 100% is. But do take note that sometimes price might go even further. Price might go up, go up, go up, go up, go up, go up, go up here, right? Like even come up to here. Then you need to move your take profit even higher, right? So you need to adjust your take profit along the way. This is a very, 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 very important thing to take note of. Okay, you need to adjust your take profit as price kind of goes in. Yeah, it's a dynamic take profit. Is stacking advisable? Edison, what do you mean by is stacking advisable? Right, entry at 127, stop loss. Bob, not stop loss at 138, slightly above 138. So if I were to put a percent on it, I might put the stop loss maybe at 140%, right? So you can actually do this on a trading view where you can come here and you can maybe put in like maybe 1.410, right? 1.410. So you have your you notice that you have your, okay, maybe not 1.410, it's a little bit too tight, right? Definitely not 1.40. Yeah, maybe 1.45% could be your stop loss. Just give it a little bit of breathing space. So don't put your stop loss exactly at the 138%, right? Okay. I'm reading Desiree's question. She says, thanks for pointing out the dynamic take profit, right? Do you add multiple trades layering, or do you do a single trade entry? Can you use ATR2 for stop loss? Fabio, yes, you can use ATR for stop loss, but I realize that ATR tends to put your stop loss a little bit too far away. It's too much breathing space, right? It's too much breathing space, right? You're using Fibonacci. We tend to follow the camp of Fibonacci. We don't divert too much from Fibonacci. Okay? Now, guys. All right. So when I guess when people say stacking, do you scale in on your trade? No. If you're using a single entry, don't scale in on your trade. That means if you're using the single checkbox system, the one checkbox system, you don't scale in on your trade. You just get in when it is right below 138%. So you need to factor in that most of the time you realize that price will react or right off 138%. So your entry might, 127. Your entry might not need to be a 127, might need to be slightly below 127, just a little bit of buffer. Okay. So yeah, yes, okay, Kelvin. Yeah, so 138 I've noticed works really, really well as a buffer. So just put your stop loss slightly beyond the 138. Okay. So Jean is asking me, how do you manually scan for profitable trades? Like what time frames do you usually use to scan? Top-down approach, specific time frame. Okay, top-down approach works for certain cases. Top-down approach works more for day trades and swing trades, right? For scalping, you tend to focus on a single time frame, right? A single time frame. It's important to know, right, whether this level is important, but usually a single time frame is enough, right? For scalping setups, how I usually do is that I have this watch list, right, where I just let me see. I have this watch list here, scalping, where I have all the different kind of currency pairs that I just use to toggle right through, right? So for example, I will toggle dollar CAD, right? I'll toggle dollar CAD. Then I'll try to look out for the big letter, the big, what's the word for it? The big reverse Nike ticks, right? So I'm just gonna look here. Okay, nothing much. Dollar franc, is there anything? Look at this movement here, right? There's nothing over here, so we don't even bother. Aussie dollar, is there anything? Nope. TV dollar, is there anything? Nope. Euro dollar, is there anything? Nope. But euro dollar, I do notice like it could have happened over here. There you go. You look at this big reaction over here. This was a very nice Nike tick and it reacted off over here, dropped very, very nicely. Okay, very, very nice. Right, I think it could have been here too, right? That could have been a nice, this could have been a confluence, but I don't like this little movement over here. Let me see. Let me see something. Not really. Give me a moment while I look at more different kind of setups. We got this Nike tick over here. See, 127, right? You stop loss slightly beyond and it reverse very nicely. It touch this level and it go up from there, right? It happens so often. It's a bit scary that it happens so often, but I found that it's pretty accurate when it happens, right? The trick, okay, next point. I don't want to dive too much in on just I don't want to dive in too much just on the Okay, I got Grunt question. No, Siddharth question. Can you use pending orders? Yes, I use almost exclusively pending orders because it allows me to set the trade before, right? And it kind of keeps my mind clear the moment I set the trade. I set my stop loss, entry, take profit, partial profit, break even, and idea invalidation before I take a trade. What do I mean by that? Check in the YouTube videos. I explain what idea invalidation is. Grant is asking, do you look at the 1 hour time frame to get the trend and then trade on the lower time frame, 15-30 minutes? So Grant is asking if I use a higher time frame to get the trend. Well, technically, how I would apply trend trading for this is that trend trading, like for example, in this example, in this movement over here, right? In this movement, right, you are bullish. It is bullish, right? Price is going up, going up, going up, going up. So technically, it would be easier to look for buying opportunities, right? For buying opportunities. That's one thing to take note of, right? One thing to take note of, right? In example here, right? You can draw this. I mean, yeah, you might have just missed out on this 127, but this is an example where you're trading. This actually increases your probability of getting a profitable trade just a little bit because it's a bullish trend. Through on the Ichimoku cloud, you know, it's just nice little bullish support there, right? So if you have a reverse Nike tick, 127, there's a bullish trend, there's a Ichimoku cloud, right? That is like 1 checkbox, 2 checkbox, 3 checkbox. More things lining up together to give you a better setup, right? So there's nothing wrong with that, right? There's nothing wrong with that. You can actually use it, and that is actually part of my later setups where, you know, not only using 1 checkbox but having multiple checkbox, right? Let me see. Adam's asking why is gold more popular for trading than silver? It's because gold is used in a lot more stuff than silver, right? That's why gold is, I mean, it's the ultimate safe haven. That's why everyone kind of runs to it. Iman is asking what's the rough win rate for using only 1 fib. I think the rough win rate is about like 60%, right? But that is where you can actually line up more fibs, and that's where the accuracy goes up by a lot. Okay, the hit rate that I usually have is about 80%, right? So Adrian's asking what do I mean slightly, right? Slightly above 1.3, right? That means if I were to have a stop loss of if I'll put my stop loss likely at the 145%. If you don't have any gauge, right? If you don't have a gauge, 145% would be a decent stop loss level, right? If you dare to put it closer, 138 could be a level. So Diana is asking, do I use other Fibonacci for confirmation? That is where we go into the next thing, right? That is where we go into the next thing, where we talk about, you know, multiple checkboxes. What is the second checkbox to look at, right? The second checkbox I look at is actually either an expansion, retracement, or a projection, right? This extension, this Nike tick thing over here, Nike tick or Nike tick, right? Inverse Nike tick, that forms the foundation. Then you add on the other stuff over here. They're strong, but not as strong as Nike tick. Let's see if I can find an example, okay? Okay, let's show you an example. This movement from here all the way up to here, we have a 50% retracement. Okay, very nice 50% retracement, just nice. Price also lined up very nicely with the 127 over here. Okay, let me just filter that a little bit neater. 127, 138, and the 50% retracement, right? So you can see over here that you have 150%, 127. So you got 2 levels lining up here, gives you a higher chance of a profitable bounce, right? So I will allocate more to this trade for this reason, right? Let me see if I can find, I need to find the other examples. I think, is this an example? Okay, 127, 138. Okay, profitable setup. What about if I do a Fibonacci projection? There we go, another nice setup over here. Now in this example, right, I have a 127%, and I also have a 61.8 projection. Projection is starting point over here, middle point over here, ending point over here, projecting upwards. right? So you can see that it touched this level very nicely, and it reversed, right? Our stop loss at about the 145% over here, and it reversed very nicely. Give it a little bit of breathing space with the 138%. So as long as it lines up nicely, that's where you can get into a trade. That's what I mean by confluence. Your first base strategy, the first checkbox that you need to tick is the Nike tick or the reverse Nike tick. From there, you just add in additional elements. Okay, from there, you just add in additional elements, right? How and let me see. Fibo projection on MT4, you can use it. It's slightly harder to use. Yeah, it's slightly harder to use. I don't have MT4 open here, but you can use it, right? So Fabio, the two checkbox strategy I just explained to you. Now I look at Nike ticks in both an uptrend and a downtrend, right? It actually works very well. The markets are swinging sideways because you're just looking for a clear movement. Remember, we only go for the original Nike ticks, right? We don't go for counterfeit Nike. So we don't go for the counterfeit, fake Nike. What's a fake Nike? I don't know. I don't know. Yeah, we don't go for Nike, right? We don't go for Nike. We don't go for the other stuff. We only go for a real Nike tick. Okay. I was hoping to find something interesting here, but I can't find it there, right? But yeah, we only go for the clean Nike ticks over here, right? We only go for the clean inverse Nike ticks, the clean Nike ticks, the clean Nike ticks, the clean Nike ticks. That's what we go for. We don't go for stuff. What I mean is that we don't go for this because of this movement over here, right? This little zigzag makes it unoriginal, right? And it's not going to be that effective. The cleaner the movement, the better. At the same time, we don't go for too small stuff, meaning that we don't go for stuff like over here, right? We don't go for this tiny stuff, right? We don't go for like this tiny movement over here, this tiny movement. A rule of thumb is that the initial Nike tick, right, needs to be sizable. What do I mean sizable? Let's put a gauge. Okay, 20 bars, minimum 20 bars to form the initial tick, right? Minimum 20 bars to form the initial part of the tick down here, right? So we can't have it like this. We can't have it like this. You can't have it too big. Minimum we're looking for a bit like 20 bars. That'll be the sweet spot. Okay. Okay. Joanna is asking if my entry is around the 1 to 7, stop loss slightly beyond the 120, TP around 23, then the risk reward will be around 1 to 1. Is that okay? No. So Joanna, don't get too caught up with the whole risk to reward kind of concept, right? So risk to reward only matters depending on it's risk and reward and hit rate works hand in hand. Okay, if I told you guys, right, if I told you guys that I have a hit rate of 10%, not of 20%, that means 2 out of 10 of my trades are profitable. Does that make me a profitable trader or unprofitable trader? If only 2 out of 10 of my trades are profitable, does that make me a profitable trader or unprofitable trader? Jasper always answering the right answers. Tabo saying unprofitable. Rod says depending on win loss. Well, I like the answers of most people here, right? Although a couple of people says that unprofitable. Mark says depends on the pip count. Well, not on the pip count, but it depends on the risk to reward, right? Meaning, if each losing trade, each trade I made, let's just say, if I made 100 pips each time I won, and I only lost 10 pips each time I lost. Okay, 2 profitable trades equals 200 pips, right? 8 losing trades equals negative 80, right? I still have a balance of 120 pips. Profit. So you notice that hit rate, your hit rate means hit rate and risk reward go hand in hand, right? I can have a low hit rate, but my risk reward is great. That's great, right? I can have a high hit rate, but if I have a high hit rate and my like a 80% hit rate and my risk reward is 1:1, that is great. That is really, really great. right? So having a 1-to-1 risk to reward is okay because our hit rate is pretty high. Okay. Now so some people are asking about Fibonacci expansion. So Fibonacci expansions are these movements here: starting point, ending point, all fibs. No, I'm not going to do all fibs. I'm going to do 1 to 7 and no, negative 27 and negative 61.8. All right. So Fibonacci expansion is when you have a starting point, you have an ending point, price needs to retrace minimally 50% of the entire move, and then it needs to go up here, right? Where's my mouse? It needs to go up in another move, straight line. Is what I call the Harry Potter kind of move. Why is it called the Harry Potter? Because Harry Potter scar. Always remember, this is a Harry Potter scar. Okay, so the move kind of looks like a Harry Potter scar. Okay, right? So you're looking for this kind of movement. How does that look like? Right? Let me see if I can find an example. Maybe here. Okay, negative 27 is slightly further away, right? But you can see that this is the movement: starting point, ending point, retrace minimally 50%, and it kind of goes up to negative 27. You use this in the second checkbox. Okay, you use this in the second checkbox. Let me see if I can find a nice 1 to 7 lining up nicely. The negative 27 tends a little bit hard to find it lining up nicely, right? But where was I? This part over here. Your second checkbox is where you find your expansion, retracement, and projection. Your first checkbox always needs to be the Nike tick or the reverse Nike tick. Okay. What is your third checkbox? I'm very worried that we are exceeding the time a bit. I can see that almost all of you are still staying here. Thank you very much. Right, but I do want to round this off really quickly with the third checkbox. Right, so we covered the first two checkboxes already. Okay, let's touch on the third checkbox. Okay, the third checkbox is actually the momentum, and what I call either momentum. So you could be looking at the Ichimoku Kinko Hill, right, and or support and resistance levels, or trend lines. These are graphical stuff, right? So what I mean by that, okay, I think a good example was this one over here. We have a Fibonacci retracement. This is the 50% Fibonacci retracement right over here. Okay, we have the 127% and 138 right about here, two levels. Okay, and then we have the Ichimoku Kinko Hill, right? The cloud acts as the support anywhere touching the cloud or inside the cloud, right? So this is the third reason, right? So we got 1 to 7, we got 2, 50%, we got 3, Ichimoku cloud, 3 of it lining up very nicely, right? So you have 1, 2, 3 check boxes. And remember, guys, the concept I like to use, right? The concept I like to use, thank you very much, Has. Right, concept I want to use is that when you're looking for something, you want to look for different opinions. Meaning, you won't go to a Mercedes car workshop and ask them which car they recommend. They're gonna say Mercedes. You don't go to a BMW car workshop and say which car they're gonna recommend. They're gonna say BMW, right? So don't get too caught up in a single study, right? Don't get too caught up using Fibonacci. Don't get too caught up extensions. Don't get too caught up using trend lines, using support and resistance. You need to hear from different camps. So you notice that the 3 different checkboxes here, right? This one is Fibonacci extension. This one is the second group, which are expansions, retracements, and projections. Okay, this one is what we call the third group, which is called graphical. Yeah, graphical levels. Okay, graphical levels, right? So you notice they are from different groups, right? Because you want to get opinions from from different groups when price you want. Okay, I'll need to check it out, Nick. Please remind me in the VIP room again. All right, yeah, but so this is what I mean, right? This is what I mean. You can even the fourth and fifth check boxes, right? Actually, if you find additional stuff like in this example here, right, I might have this support level from here, from the past. Can you see this very nice support level from the past? It's a pullback support level, right? And then I have this movement over here. I think it's not, probably not, right? So we got this. This is when you got 4 levels that line up nicely, right? You have the You got 1 here, you got 127, you got 50%, you got, you know, Ichimoku, you got pullback support, right? So 0.5 plus 0.5 plus 0.5, 0.5, you got 2%. IKH means Ichimoku Kinko Hyo. It is just the cloud over here. It's the Ichimoku indicator, okay? Imad, right? So that Imad is asking, you know, if the trend on your side, why don't you kind of play the bigger move slightly beyond? That is actually a different part of your trading strategy, which I'm going to share with you maybe next week, because that goes beyond a scalp. That's actually a day trade, right? So most of people are thinking, okay, if I play the trade here, I'm only making a little bit of money. You have a little bit of money, but you have a very high hit rate. If you have really the trend in your favor, you can actually play the move up to maybe even over here, right? And that is where you get insane risk reward kind of setup, right? But that's not a swing trade. That's not a scalping trade anymore. That is more like a swing trade, because from here to here, you know, it could be one entire day, right? If you think about it, right, I'm going to show it to you over here, right? We got a long position. If this is our long position, if our stop loss is about here and our take profit is all the way up to here, right? This is a risk to reward of 7. It's a 700% profit depending on the trade that you take. That is why it can be crazy. But that is more of a day trade, which I'll be sharing in the next webinar on day trading strategies. Okay. Now, guys, I hope you found today's session useful. I didn't have time to really touch on trade management too much, but if anything, go and practice what I taught you today. Right, the 3 checkbox system. Each checkbox, you increase your risk allocation just by that little bit. Right, Bob, I'm glad you still learn something new every week for the last one and a half years. Thank you for staying with me for the last 1.5 years, man. Marcos is asking, are you going to do this tomorrow live trading? I mean, yes, Marcos, you'll be doing it tomorrow in live trading. Desiree, I'm glad you found this useful. Thank you, Jean. Thank you, Mark. Right, Joanna, yes, go do some homework. Thank you very much, guys. Right, thank you very much. Right, I don't know. I don't think we have a poll today. Right, do we have a poll? Right. Okay, yeah, if you can. Shucks, sorry, I need to run this poll. Right, if you can just help me vote anywhere from 1 to 5. 5 being very useful, 1 being terrible. But if you vote 1 or 2, just let me know why, how you found it, and if there's any way we can improve, right? Because I'm always trying to bring you guys, the request recently has been to focus more on trading strategies instead of just the indicators. So today I'm trying to focus a little bit more on the way you can apply what you've learned, right, into trading strategies. So if you found it useful, let me know, give me a thumbs up. Thank you very much, guys. Right, we have I guess about 95% of you guys voted 4 and 5, which is great. Thank you very much. I'm gonna close off the polls, right? Thank you. I got about 95% 4 and 5. No one voted 1 and 2. Thank you very much, guys. Right? But yeah, that's it. That's it for today's session, right? Yes, it's a recorded. You can get it on the IC Markets YouTube channel, right? Thank you very much, Marcos. I hope to see you guys more often. Those of you guys who are here for the first time, please tune in again tomorrow. Tune in where Cassandra runs through her setups, right? Every week, you know, we have this IC Markets webinars, right? You can leave, you can go to IC Markets support channel, right? Tell them that you love the webinars. That'll be great for me too. I'm kidding. But thank you very much, guys, right? It's been great having you guys. Love to see the new people here. Love to see the old people who have came back, right? My loyal followers over the past year, right? You know, you're always going to learn new things. I'm always going to try to teach you guys new things to help you guys be better traders. That's it for me. Stay safe, trade safe, and peace out, guys. Peace out. I'll catch you guys in the VIP room, man. I'll catch you guys in the VIP room. Where to get links from the webinar from IC Markets. Go to IC Markets and the webinars. You should be able to find it. Okay. Adios, guys. Thank you very much. Bye-bye. See you guys. Adios. Thank you, guys. Bye.